Hey, I'm just a guy trading, and this is my YouTube channel. Thanks for being here. Thanks for checking this out. I hope you get some value from it. I'll try to keep it short and sweet. I bought some ULTY, and as you can see on the screen, I got a pretty good fill, and I sold it all. And I sold it before I actually qualified for the weekly dividend, partly because it was up on the ETFs almost as much as I would have gotten from the first distribution. But the more I thought about it, after I sort of built these positions in weekly covered call ETFs, in the 4 of them that you can see on the screen, I thought I'd rather actually figure out what they're doing and implement more of that rather than pay the high management fees and deal with the NAV erosion, net asset value erosion that happens over time. And then, the difference between if it's in my own account and the strategies are of my own design, then I won't be forced to make distributions every week. I can decide, when to stay in a position, when to hold a position. So all those issues about return of capital versus, actual distributions and tax issues, most of those things don't affect me because I'm doing the bulk of these trades in a rollover IRA account that has about $500K in it. I did want to mention really quickly that I have this, sense that, most people in our society don't really get paid what they're worth. Sure, there are some people that sort of over-index and, they've been paid really well, highly valued, highly skilled members of our society, of our workforce. But for the most part, most people aren't, and, when I look at pictures like these people across blue collar and white collar jobs, you wonder if they were paid correctly. I think that's one of the reasons why I've always had a chip on my shoulder to invest. Not that I didn't, get the degrees and go to college and level up and apply for new jobs and go to the boss after, kicking butt and asking for a raise and something that I clearly earned. I still think over the, course of my career, at least the last few jobs, that I wasn't paid what I was worth. So I really think of investing and income investing through options and dividends as a way to offset that. And I think maybe a lot of people invest with that chip on their shoulder. So in terms of ULTY, I tried to build a position in it, actually ended up selling into the strength of other people trying to buy just in time to qualify for the dividend. And then what I found was I'd actually rather analyze their week-to-week holdings and positions and get a sense of the trades that they're in. I looked at an AMD position that you'll see here. It's basically 2 put credit spreads, that you can see the whole list of holdings, so you can get a sense of the stocks that they've identified that have high implied volatility and rich premiums for option selling. There's a couple really interesting ETFs. I think what I figured out is, although it's convenient to have an actively managed ETF regularly paying you distributions, I don't really want to suffer the NAV erosion. I don't want to buy an asset for $6 and then get distributions and then find out a few months later that it's only worth $4 or $3, or it has to do a reverse split, and it's almost hard to know how much I've actually lost. I'd rather figure out how to do it myself by tracking what they do. In future videos, I'll share the trading that I've actually been doing in this account with covered calls and cash secured puts and the returns that I've seen year to date. I basically track a few different categories. I track the cash interest and lending interest that I earn in the account, And Fidelity also pays interest on cash secured puts with an automatic sweep account. I track how much I receive in dividend payments on a month-to-month basis. And I also track the covered call and basically all the options premium that I'm able to actually close out. I don't book it as a gain until I've actually closed it out. Either expires worthless or I bought it back and closed it. And I also, of course, track the capital gains for any sold positions. If I have a covered call position and I let it get exercised away, obviously, there's a capital gain. So across those categories, I feel like I'm getting a better sense of my total return for the entire year. And just learning to trade better on our own is probably the best strategy for retail investors. The idea of turning our assets over to fund managers, expecting them to not only be able to create incredible value with options premium, but also capping your upside and also taking management fees so that they can pay their staff and infrastructure. That should, if nothing else, it should at least be inspiring to let you know that it's possible to do that yourself. I don't have staff. I don't have overhead. I don't need to take the slippage of management fees. I'd rather actually just learn from these professional fund managers in these wildly popular income ETFs and acquire the skills on my own. And I kind of encourage you to do that too, if you're interested. All right, hopefully this is helpful. Please subscribe, and I'll be posting more things soon. Thanks.